Okay, now let's go to other markets. Now going to the Middle East, Abu Dhabi is in the positive 0.04% at 9,398.77. Dubai follows suit 0.29% at 4,235.85. We see other markets. Saudi Arabia is also positive 0.28%, 12,473.34. Qatar is the lone loser right there, 0.57% at 10,154.52. We move to the United States, where stock futures rose on Thursday as Wall Street looked to build a modest rebound with key economic data on deck. Futures tied to the Dow Jones is up 0.21%, 38,575. S&P also positive, as well as Nasdaq marginally up 0.07%. Now, stocks rallied on Wednesday, that was yesterday, but did not erase all of the losses from Tuesday's sell-off, which came on the heels of that hotter than expected inflation report. The S&P 500 recaptured 5,000 level, closing slightly above it. Investors are weighing whether the Federal Reserve can bring down inflation without rate cuts. Earnings season is still on, both in Nigeria and the United States. It paints a muddled picture of corporate America. Cisco shares went down 5% in pre-market trading after tech company announced layoffs and weak forward sales projections, and among other stocks. Now let's go to Asia. Asia right there. We see that Asia Pacific markets rebounded after mostly falling on Wednesday. Nikkei 225 is back to its 38,000 level right there. 38,157.98 at 1.21%. Kospi, however, hasn't recovered that much. 0.25% in the red, 2,613. The Hang Seng is looking good, 0.41% at 50,944 right there. Other markets, Shanghai good, 1.28%, and for Australia, 0.77% in the green at 7,605.0. Now, to stay with the markets now, but not the equities market, let's go to the Eurobond market. Africa's Eurobond market has picked a lot of interest in recent times. We've seen Kenya. Kenya has a Eurobond which is maturing in June. And talking about, that's Kenya now, talking about buyback of those Eurobond. And of course, the threats or the risk of default is also there, especially with the dollar gaining. So it makes it more expensive to service those. So let's talk about the Africa Eurobond market. We see that at the end of June 2023, there were about 143 billion as of face value of African sovereign Eurobonds outstanding, currently valued at 107 billion. A lot of billions going on there. Ghana also has about 13.2 billion Eurobond that are being restructured. We know that we've had those protests in Ghana about the restructuring because the country was not able to meet up. Of course, IMF is somewhere around there giving also conditions, for them to be able to access the loan that was promised. But let's talk about this now with Ifeanyi Uba. He's a research associate with Commercial. Hi, Ifeanyi, good afternoon.
Hi, good afternoon. Thank you for having me.
Good to have you. So we've seen a couple of African countries go to the market, Eurobond market, even this year, as early as it is. So it seems more and more countries are looking that way, but there's also a price to pay going into the Eurobond markets.
Yes, the price to pay is going to the Eurobond market at higher rates. Right now, what we are seeing is that Kenya entered the Eurobond market recently and has been oversubscribed. But Kenya entry to the Eurobond market was on the backs of repayment of their 2 billion. And the current Eurobond they're selling is supposed to mature at 2031, and it's at 1.5, but they're using it to pay a huge chunk of their 2 billion euro bond, which was maturing in June this year. So we are seeing players entering the market at a higher rate that cannot afford to borrow at this rate. When asked the finance minister about Nigeria's position on Eurobonds, he alluded to the fact that we'll be looking at entering the market when rates has subsided, and market anticipation for rates decrease will be around H2, which will mean around the fourth quarter we would expect Nigeria to come in, as we are expecting to borrow 1.7 trillion from the international market.
So talking about Kenya staying there, they are also talking about buyback because their bond is maturing in June.
Yes, so the buyback is usually done to boost confidence in particular sovereign bond. And, even though it's maturing in June, the rolling out of this new bond is worth 1.5 billion, and the bond maturing is worth 2 billion. So we can see that this bond is necessarily to help repay the old bond that is maturing in June, and the size of the bond, which was oversubscribed, accounts for a huge chunk of the bond maturing.
And then I think we had Benin Republic also go to the market this year.
Yes, we also had Ivory Coast also going to the market, and it's also at a higher rate. But unlike Kenya, that has an outstanding payment, they came without any outstanding payments, but still alluded to take the higher rates. There is also a standing assumption that rates might remain high for longer, because the point of focus will be the data coming out from the US, and particularly the US inflation. We saw how the market reacted by the US yields jumping up, and other markets in the Eurobond market reacted to the hotter than expected inflation. If inflation continues to print hotter, the expected easing might not be seen, and we might see other African countries still enter the Eurobond market regardless of the high rates. But market expectation is that there's supposed to be an easing of by the time inflation starts to get cooler, and by H2, we should expect more sovereign countries coming into the market.
So other than, inflation from the US and all of that, we also have the issue of ratings that also determine the price that countries have to pay by Moody's, by Fitch. If a country's Eurobond is rated down, then obviously, because it's riskier, then they have to give more yields or promise more yields.
Yes, rates is actually a very important concept to consider. That's why you see countries like Ghana trying to do their restructure. And even recent news shows that they had removed their finance minister, which the market reacted negatively to that news. But all this are done to try and put debtors and investors in the perspective that, okay, buying the sovereign bond is actually a good place to store the value of your money, and that will actually positively improve ratings. Talking about ratings, we have seen a kind of upward outlook for Nigeria because of this new administrations and his laissez-faire policies of trying to increase investors' confidence and improve the currency by liberalizing it and removing the holds of the market.
Yes, so staying with Nigeria, you did say that perhaps by the second half, Nigeria should also go to that Eurobond market. But we see a lot of activities in the domestic markets. As you said, the auction of next week. And then yesterday, we also saw DMO release the calendar and all of that. Can Nigeria avoid, this high rate borrowing from Eurobond? Is it possible?
Well, it's a very dicey question. It would depend on when they enter the market. And I think the timing is actually preferable, given all the factors, right? But we still have a 1.77 trillion to cover in terms of international borrowing. So we will need to enter the market at some point. But the timing would be what would be important. I believe the finance minister and his team would be putting a good amount of time working on the timing on how to enter and best benefit the country at the lowest cost possible.
All right, Ifeanyi Ubah, thank you so much for sharing your perspective with us this afternoon. Research Associate with Commercial.
Thank you.